Hello everyone and welcome to another Nifty 50 Outlook video where we are going to discuss the global markets and we are going to discuss the impact of certain geopolitical events on Nifty 50 and the Indian stock market. And as of now, we also have that understanding that Iran-US phase 2.0, the war continues and the peace deal has not been respected. And some of the news are coming from the different media outlets that US has launched retaliatory strikes on Iran as Trump mourns 2 American troops killed in Jordan. So what has happened in the past 2 weeks is that a lot of retaliatory strikes has happened on the military bases of both Iran and US. We are seeing that Iran is also not budging. We are seeing that the President Donald Trump, he's also making some aggressive comments. And at the moment, it's very difficult to say which direction the war is going to head into. Are we going to go for a peace deal or are we going to go for another round of retaliation from both the countries? And with that, there is also the issue of the Strait of Hormuz. The Strait of Hormuz right now, we were thinking that it was going to get operational because of the peace deal which has played out. But again, the tension has been rising. The trade is going to get affected. And the countries who are doing trade in these areas, they are going to be majorly impacted as well. So it is a complicated scenario. We are going to see that a negative spillover into the markets most likely may also be happening. So we have to watch this scenario a little closely. One more thing that I want you to consider is that right now the US is also hosting the FIFA World Cup, one of the largest sporting event in the entire world. And what US right now is also seeing is influx of a lot of people coming into their country from all around the world. They are coming to support their team, they're coming to support their favorite players, and a lot of movement is happening within the states. A lot of people are moving around, a lot of business implications are also there. And right now I just think that US is also a little preoccupied with all of this. We also see that the President Donald Trump has been coming and making a few comments with respect to some of the players in the FIFA World Cup. So all of that is there, and today we do have the final between the powerhouses Argentina and Spain. So after all of this, after the football fever subsides, I think the US is going to be a little bit more focused on the Middle East, and then we are going to see some decisive move made by the US as well. So let us see how things play out, and the impact of that we must now analyze on Nifty 50 and the Indian stock market as well. But first, let us go and analyze what we had discussed in the month of June, because we need to build the foundation on which we are going to do the analysis. In the month of June on Instagram, I had shared this. We had discussed how Nifty 50 was doing and how it was in the accumulation range. Then I had also discussed how Nifty Bank was performing better to Nifty 50. As you can see, Nifty candle was red and corresponding Bank Nifty candle was a kind of a bullish hammer. And that is where we had come to the conclusion that Bank Nifty was making a bullish hammer, indicating a better relative strength outperformance. So better relative strength outperformance, we are just doing a comparative analysis between the two indices, and that is where Bank Nifty was indicating that it was going to do better. Now we have also discussed with respect to PSU banks. In the PSU banks, a multi-year breakout has happened in PSU banks. One may consider looking for investments and momentum entries in this segment. I'd also discussed the pharma sector. The pharma sector continues to maintain a positive outlook with higher high and currently offers pullback trades in many counters. And lastly, I had also discussed how Nifty IT, Nifty Media, Nifty FMCG and Nifty Realty continue to be the underperformers, laggards in the market. What to do with these? I had asked you to refer to Mr. William O'Neill's advice in that. So these were the analysis, these were the bits and pieces that we were playing with in the previous month. And based on the previous month's analysis, let us continue to build our analysis with the recent price action data that we have. And let us first go and analyze how Nifty 50 has performed and how correspondingly Nifty Bank has also performed. We had done the analysis over here. This was the red color candle that I had discussed. What happened in the next few weeks is that Nifty went up 6.33%, and correspondingly, as we had discussed, that Bank Nifty was having greater chance of performing because the relative strength was greater. Nifty Bank has given us a performance of 10.63%. So that's close to a 5% difference in price movement. And this is where the relative strength comes into play. This is how it allows you to position yourself in stocks which will outperform compared to the broader Nifty 50 index. And I would highly recommend you that you continue to do this kind of comparative analysis to find out the better sector and the better stocks. But now again, I would like you to go and have a look at my channel. I would like you to have a look at two of the videos. In fact, the Iran peace deal fails and this video as well, analyzing US stock markets and impact of that on Nifty 50. These two videos I had discussed in this video, I had discussed how the fall was going to happen based on only price action data. Here, the news with respect to US and Iran had not come at that point. And here I had discussed something with respect to price movement and momentum. So these two videos are very important. In between, if you can look at these two videos, it will also be helpful for your analysis, and it will bring you at par with how I am currently thinking and how we may position in the future as well. So let us go and analyze how Nifty 50 is doing, and this is how the analysis is. Let me just open TradingView so that I can more properly explain all the things and analyze the charts as well. As you can see over here, this is a kind of a lower high, lower low structure, and this is the point where I am considering as the selling climax. This is the point, the lowest point. This is going to be the point of reference for me to draw the range. The bottom of the range is going to come there, and the movement from the bottom of the range to the higher side of the range, this point is going to be considered as my automatic rally. So this is going to be the high of the range. Now, what had happened in the previous month and what we had discussed in the previous month was that as the market was in a lower high, low, low, lower high, low, low, if the market does start to go up on the back of gaps, the likelihood is greater that the market is going to again come back and fill the gap and take support in this region. This is what I had discussed, gaps with respect to momentum. I would highly recommend you that you again go and have a look at that channel, because I had clearly discussed that this is going to be one area where potential buying can again happen. So the buying did happen. We again started to see the market head in the higher direction. And now if I go back to the weekly time frame, and let me just remove all the drawing over here, what we did see is that market headed into a higher high, higher low structure, and then eventually the market came back in this range. Now what has happened is that the market has attempted to take some support, and what we have also seen during the market being in these ranges is that some of the metal stocks, some of the banking stocks, some of the finance stocks, and some of the pharma stocks, they have been doing very well. In fact, in this entire rally, I will just go to the pharma sector analysis next. You will see that the pharma stocks have performed a lot, and right now the potential entries are not quite there. But now that we have the news, that a little bit of negativity may be coming in the market, we also understand the concept that the 30 weekly moving average can sometimes act as a resistance in the market. So it is entirely possible that tomorrow the market can stage a red color candle over here, and then we can again come back in the range, and around these regions I am expecting that we are again going to find some support. I do think that this point is going to be a strong reference point. This is a place where the markets stopped to fall and then started to head in the higher direction. Again, maybe we can come around this area, and we also do have that understanding. I'll just remove everything to make it more clear. And we do have that understanding that this is a gap support region. Potentially, if we can get some green color candles over here, this could be a positive sign, and that is how I'm going to read the market as well. But if suppose that gap is not respected, if we go a little bit lower, I think the bottom of the range again is going to be very, very important. As long as the price continues to oscillate around this region, I think this is something that can be expected. This is something that we can cope with. But the moment the market starts going down here, this is where all the uncertainty is going to come in. And this is the place where a lot of people are going to go into panic mode as well. So as of now, this is what I'm expecting. I'm expecting that the market can come around these regions. We can attempt to take support over here. Again, when the market would be breaking out of this point, this again will be a sign of positivity for me, and then we can potentially head into one more rally. So that is the analysis of Nifty 50, and now let us go and have a look at some of the sector specific movements which have also played out. And let us first discuss Nifty Pharma. As you see, this is the structure which was there in Nifty Pharma. This was a kind of a pole like structure which has played out, and this was the flag which had broken out in the previous 2 to 3 months. This was the entry point, and again the market has headed into a higher high, higher low. In fact, this is also the area where we are seeing a lot of the pharma stocks have been performing very well. If I just take you to the pharma stocks over here, you can see this is a higher high, higher low structure. Again, market has gone into a kind of extended structure. Then you can again see higher high, higher low, and again the market has shot up a lot over here. One more scenario. This is one more structure. If I do the analysis, this is a kind of a pole flag structure. The entries were coming around here. Again, the market has given a good move over here, 20%, 25% move. You see a kind of a structure has formed over here too, cup and handle breakout, and around these regions we see one more move heading in the higher direction. So as you can see, the recurring theme that you can see in these pharma stocks is that these stocks have gone very far from the 30 weekly moving average. And I have already discussed the concept of mean reversion with you all. I had discussed that you can look up the teachings of Stan Weinstein. He clearly says that prices have a tendency of moving back to the mean over a period of time. So right now, if you are to think of price at these regions, you should not be thinking of creating new positions around these regions because the prices have already gone up. Now, if you are to consider any more fresh entries over here, what you should look for is you should look for any price correction which can come back. You should look for prices to take support at the previous resistance converted to support area, or you can consider the 30 weekly moving average also as your reference point where you can look to see some bullishness, after which you can decide whether you want to increase your allocation in that particular stock or not. So as of now, I think you should be having that understanding that this is not a point for you to take any action. Let the market go in your favor or let the market come back around good entry points. That is where the decision making comes into play for you. As of now, there is no decision making needed in pharma. A potential fall can happen, and let us see what impact of that potential fall, potential mean reversion will have on the Nifty 50 as well. I would also like you to have a look at some of the metal stocks. Let us open CNX Metal. Let us open a CNX Metal, and this is the metal chart. This again was one more beautiful structure which has played out. In fact, what we do know is that the metal sector, along with the banking sector and finance sector, these are the leading sectors in the market. I just recall what had played out in 2022, 23, 24. This was the time where the auto stocks were performing very well, and this was also the sector which had started to perform in the beginning of the rally, and it continued to play out and it continued to do very well till the end of the rally. So keeping that in mind and keeping the teachings of William O'Neill, where he had discussed the leader stocks and the laggard stocks, this currently is a leader for me. This is a sector which is performing well, and it is already in a higher high, higher low compared to what Nifty 50 is doing. If Nifty 50 is sideways, we are seeing that the metal sector is making higher high, higher low. And right now what I'm seeing is that the metal sector has corrected a little bit and it is coming near the 30 weekly moving average. And I'm thinking is that we can potentially form a base around that particular region. Again, this was not the point for you to enter in Nifty metals. This potentially could be some better areas for you to focus on and seek an opportunity to enter Nifty metals. And again, since this is the leader sector for me, this is the sector of priority. This is the sector that I am going to target. And so only just, I think maybe it can take 1 to 2 months for the bullish base to get formed. And then we can again see a potential move on the upside in Nifty Metal Index as well. And lastly, I would also like you to have a look at the IT index, because that is an area which has been in discussion. Many of the people are quite stuck with some of their positions in some of the prominent IT stocks. And what you can see over here is that Nifty Metal made a base over here. It started to head in the higher direction. And again, what has happened is prices have come back to where the base was formed. And what we also saw is that prices came to test the low of the range. In the past 2 to 3 weeks, what we have seen is that some amount of bullishness is coming over here. But as long as prices are in a range, it's very difficult to say which direction the market can take. And usually, if you are to go through the teachings of Mr. Richard Wyckoff, he will clearly state that as long as prices are there in a range, it's a risky scenario because you don't really know how long the prices are going to be here. But what I personally think is, I think we can see a kind of a movement which has played out in some other stock as well. I will just take you to that stock. I would like to do a comparative analysis over here. What you're seeing over here in this stock X, let us not discuss the stock name. Here what happened is that market made a lower high, lower low. It made a kind of a base over here and got out of the base. After that, what happened is that prices came back again in this range. It started to move up and again it came back in this range. Now, what I can see over here in Nifty IT as well is that market has come back to this range. Now, what can potentially happen is that at the high, if it somehow consolidates and if it does not take resistance from the 30 weekly moving average, we can see a 2 to 3 months sideways movement, and then the market can start heading in the higher direction. But again, if you have a look at these candles over here, these resistance areas over here, these are big wide range candles which often tend to give a lot of resistance to price to go up. So what may happen is around these regions, we can again see the prices come and then another price fall back to this region. And in this entirety of this time, you would be losing close to 6 to 8 months or even 1 year may go by for all of this to play out. So that is why, since this is the laggard sector for me, and Mr. William O'Neill clearly says that do not focus too much attention on the laggards. When you do have a higher high, higher low kind of structure already in place, why should you look at those structures which are not moving at all? So yes, that what can happen is that some of the IT stocks will come back and recover. But again, the opportunity cost is there. You must consider that opportunity cost will be there as the stocks would be heading into higher grounds. You potentially can just be in a position to recover all the losses which are there in Nifty IT. And by the time the rally in Nifty 50 comes to an end, you may not have made a lot in the IT segment. So that is why that is my views with respect to Nifty IT. I think maybe some positivity may come in the future, but this is going to be a very slow segment. This is going to be a sector which is going to be underperforming in the market. And as I said, I do have trending structures in my favor, there is no reason for me to go and have a look at these kind of structures. So that is all I have over here, and I hope that I was able to add some value to your analysis as well. This is how I have been viewing the market, and let us see how the markets are going to play out in the next few months. Again, we are going to do one more analysis, maybe after 1 or 2 months, and then we are going to see how price is going to move and which direction the Nifty 50 can potentially take.